everyone, I'm the Tax Pro, and today I'm going to talk with you about creating statements within QuickBooks Online. Statements are used to let clients know multiple different things. So there's a couple different statement types. We maybe are telling the client what they owe. We're maybe telling the client the transactions from a specific time period, or maybe we're just giving them a list of open items that we have. Okay, so there's a couple different types of statements that we can send. It's best practice if you have clients that carry balances from month to month. It is best practice to send them a monthly statement. I have seen a lot of companies that just don't send statements. A couple of things happen. Sometimes those customers forget that they owe balances. And then, sometimes there's a disagreement that then comes up once you're like, hey, you owe us this money, it's past due. And they're like, I had no idea that I owed that, or no, there should have been, a credit on there. I returned that item. If you're not issuing statements every month, you could potentially run into some issues with customers. So let's go over how we actually issue statements. So this is the new 2025 layout. It's different than what it used to be. If your QuickBooks does not look like this yet, it will soon. In order to navigate to the statement section, we can either go to the plus create, and under customers, we can go to statement, or we can navigate there through the sales and get paid area. Now you'll notice when we pull this up, there's no statement option here. If we go to overview, we can go to show all options, like under this create actions area, and we can select create statement right here. You can also favorite it so it pops up on the top if this is something that you're regularly doing, which again, you probably should. So we're gonna select our statement type. There's 3 different statement options. We have a balance forward, which is going to give the customer the balance, like a total for the amount due for the balance that they have coming forward into this new period. It's going to show them the activity for that time period that we are sending them a statement for. And then it's going to give them their total balance due at the end, okay? Open item is going to show them all items from the last 365 days that are sitting as open on their account. So all items that have not been closed out, fully applied, fully paid, all that good stuff. Transaction statement is going to show them transactions from a specified time period. It's not going to have a balance that comes forward, and it's not going to show them the total amount due. Let me show you what each of these looks like. We'll start with the balance forward. So when you select your statement type is when you're going to kind of get some different fields here. So we're going to have the statement date. I'm just going to run these statements through the end of September. And then you can select what customer balance status you want to send to. Do you want to send to all customers? Do you want to look at only those with open balances? Or do you want to send to only those with overdue amounts? Okay, I'm going to do all. And then I'm going to select all recipients. So you're then going to select what recipients you want to send to. We're going to select a start date. So if I'm running this for the month of September, I want to select September 1st through September 30th. You can put emails here. That's essentially going to allow you to email these statements out. Let's take a look at what these look like. So I have my statement date is of 9/30 and my start date is 9/1, end date's 9/30. Okay, so, oh, it unchecked everybody, please. Okay, let's look at the previous statements. So this is what a balance forward statement looks like. You'll notice here that there's no specific time frame on here. So the customer is not going to see that we selected September 1st through September 30th. They are going to see the date of the statement, and they're going to see the total due. They can kind of tell what date this is run through because our balance forward is going to be the day before that time period starts, right? So the balance as of 8/31 for Alfred here was $0. He didn't owe us any money starting, the first of going into the 1st of September. So as of 8/31, he did not owe any money. And then it's going to show Alfred his activity for the time period that we have selected. So he has an invoice on 9/6. It's going to show him the amount of the invoice and his total running balance here. Next, we're going to see a sales receipt. The sales receipt, it's going to show the amount of that sales receipt, but you're going to notice that this $2,500 is not added to the $7,500. And that is because the sales receipt is paid at the time that it is recorded. So it's like you issued an invoice and it immediately was paid, right? That's a combination transaction that lives in this sale receipt. So he still owes $7,500 after the sales receipt. Notice that any voided credit memos are included on statements. It's really important because if you void a credit memo, it's going to sit here. Customer might have questions, right? So the credit memo amount is 0. They still owe $7,500. Next, we're going to see a credit memo that has been recorded. However, this credit memo has not been applied, and I'll show you in a minute why I know that. This shows a negative amount because it's a credit memo, and this is the balance that Alfred has. At the bottom of the balance forward statement, you're going to notice that it is going to give you an aging summary. And what that means is this is going to tell the customer what amounts he has that are currently due, 1 to 30 days past due, 31 to 60, 61 to 90, and more than 90 days. Once your customers start moving balances down this timeline, it becomes harder and harder to collect. Really important that you're paying attention to anybody that has balances in these areas. The likelihood of them paying goes down. Notice though that currently due is showing $7,500 even though there's a credit memo here. That's because this credit memo has not been applied to any of the invoices, okay? So that is because the credit memo has not been applied. If the credit memo gets applied, then this current due would sit at $6,180, which shows this balance right here. So this can create some confusion. When you're looking through statements, if you see that where their balance is less than what is showing down here, it is because something was not applied properly, okay? Let's move on to the next balance due. You'll notice that this one is showing a balance forward of $0 and then is showing a payment of $1,000. So this customer has negative $1,000 on their account. Sometimes you'll see this too with returns. And so they have a negative $1,000. This lets them know, hey, we have a credit on your account. Two Birds Boutique, they have a balance coming forward. So they had a $7,105 balance on their account prior to the start of September. We'll see here that they have an invoice that increases the balance due, and then we'll see the sales receipt. Again, the sales receipt is not going to increase the balance due because it's like an invoice and a payment in the same transaction. So they already paid this $3,756, and then you'll notice that they have a payment on 9/24 of $7,000. Their total balance due is $1,927. If we scroll down, you'll notice that amount due is here, which means that that payment was fully applied. But the amount that we're showing as past due, or the amount that we're showing as due, is 90 plus days past due. And that's because this $7,000 was first applied to this invoice and then partially applied to this balance forward. Okay? So based on what transactions you're applying payments to, that will affect your aging summary down here, which can be important for certain customers. Okay, let's look at this one. This one has a balance forward, and then it has a sales receipt. So essentially what we're doing is we're saying, hey, you brought this balance forward, you had a sales receipt that you paid us right away, you still have this balance due, okay? So balance due statements can look different depending on the transactions of the customers. Now let's look at open items statements. Open item statements, when we select this, our options kind of go away, right? So we're gonna get options to see customer balance status if it's open or overdue. You'll notice Two Birds Boutique is overdue and Alfred is open but not overdue. I'm going to select both of these and let's take a look at them. Okay, so this is going to show us the total amount that is due. And it is showing us this invoice. Notice this invoice is not due until 10/21. Okay, even though our date is 9/30, because this transaction happened on 9/6, it's just going to show us this transaction, even though it's not due yet, that's absolutely okay. This is also going to have an aging summary. Okay, so our currently due is $7,500. Now we have Two Birds Boutique. Oh, they have an invoice all the way from 2024. That's a problem. So we have this invoice that is showing the open amount and then it's showing what's due. Now we looked at these statements in our last statement type, right? When we had that balance forward statement. And if you remember Alfred and this Two Birds Boutique, they had a lot of transactions within that monthly transaction list, right? They only have one each here. And the reason being is because these are the only items that are open, meaning that these are the only ones where there's a balance due or something's going on with them, right? So these are the only ones that have open balances. And that's why they showed up on this statement type, because this is only going to pull in the invoices that are not paid yet. Okay, so if you have an open item, it's literally the open items, the items that are open, they have not been paid yet. Balance forward is going to show us the transactions as like a one lump sum item for the period prior to when we're running the statement. And then it's going to have a line item list of all of the items, regardless of whether or not they affect the balance. And then it's going to show us the total balance. Transaction statement. So this transaction statement is going to show us all the transactions for a specified time period. So when we select transaction statement, we can select open, overdue, or all. If we select all, you'll notice that we have Alfred, Two Birds, and unlimited. Unlimited has a $0 balance. Let's look to see what this statement looks like. I'm going to run it again for the month of September, with September 30th being the statement date. Oops, I'm unselected, everybody. Okay, let's preview. Now, Alfred here has his statement date, and then you're going to notice that he has just the transaction information for September. There is no balance forward. There's nothing else there. This is literally a summary of what happened in September. This gives him no information on what he owes right now. Okay? It is going to give him just the things that happened in September. Same thing here with Two Birds. They are just getting the information about what happened in September. Even though they have that 2024 transaction, that invoice that's sitting there, if we looked at this statement, Two Birds would assume that they do not owe any money, right? Because they have this invoice and they have a sales receipt. The total amount that they essentially charged is this $55.78, and the total amount received was again $55.78. If you send this to Two Birds, they might not realize that they have that 2024 balance up there. Okay, right here, same thing. Lisa Green with Unlimited Company. She's paid everything. There is no aging summary down here. So in summary, what transactions do you use for what purposes? Balance forward is generally what you're going to send to customers. It's going to show them the balance that came forward. It's going to show them the activity for the month, and it's going to show them the total amount due. That's going to be what you should be sending out generally every month. The open item and the transaction statement are going to be more statements that you send out to customers who request additional information. Okay, so and the transaction statement is also a good transaction or a good statement to send out if you have a card on file that you just charge every single month. The transaction statement might be a good statement to send those customers, because you're essentially sending them, hey, this is what, I have for this month, and this is what you're going to be charged. All of these statements you can send. So if we save and send, we need an email to put in here first. Give me just a minute. I'm going to put an email and then. Okay. Here is when I put in an email. This is what the statement looks like. So this is Alfred getting sent a statement. It says, "Dear Alfred, your statement is attached. Please remit payment at your earliest convenience. Thank you for your business." This is just a template, right? You can change this in settings if you want, or you can change it for customer. Right, here's the statement that Alfred's going to receive. Again, this is not a balance forward statement, so it might be kind of confusing for Alfred, but you can go ahead and send that and it will email it to Alfred. Hopefully that was helpful. If you have any questions, please let me know. I would appreciate it if this was helpful, if you would like and subscribe. Otherwise, I will see you guys next time.